Welcome to Keep What You Earn, your judgment and jargon free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. All right, so a few days ago, I was telling you about this financial priority formula that I had come up with and uncovered the first metric in that formula. And it's a 7-part breakdown of the priority of your financial metrics. And again, I kind of discovered this as I was going through a power session consult. And I realized how scattered the person was in terms of what they wanted to focus on or what they wanted to accomplish in a power session. And I said, you know what? This is what I would focus on first. And I actually broke down the order. And that alone became almost a consultation in terms of like giving advice and saying, this is what you need to go do. It gave the direction of here's your roadmap. And I'm going to share that with you because I believe, again, it's more important that before I package this in a fancy way, I get this information out there because somebody might be able to really use this the way it's packaged. And I went through gross margin on the first one. So part one was gross margin. We covered that a few episodes ago. And now I want to cover what I call operating profit. Now, operating profit, like you need one more term out there. I know. Like you need one more name for net income, net profit margin, operating income. What else is there? Uh, profit. They're all synonymous, guys. So listen, I call it operating profit in this example and in this framework for a specific reason. So gross margin was the core profitability of your offer. So that's are you selling something for more than it cost you? Straight up answering that question. Are you selling for more than it costs you? Then this one, operating profit, is fundamentally, are you running a business that is making more than it spends? Period. You know, that's it. Are you running a business that's making more than it spends on a profit level? And this is where you incorporate in operating expenses. So after you figured out your gross profit or your gross margin, you then go, okay, I have all of that money to now pay to keep the lights on, to now pay my staff in the office, to now pay for softwares and subscriptions, to pay for masterminds and coaching and all this other stuff, right? So all of these other operating expenses are derived out of your gross profit. So once you have your gross profit, now you can go and spend a portion of that, hopefully not all of it, a portion of it on operating cost. So after we look at gross profit and we determine that's healthy, we look at operating profit. Again, going back to if your gross profit's not healthy, there is no point in moving forward because that is the thing to treat. Before we move on to the next step's operating profit. And that's because the operating profit will tell you at the end of the day if the machine that is your business is producing more money than it costs to operate. That's it. It's the production and the productivity of your business from a cash perspective. Is your business producing cash? Now, don't be confused. I'm actually going to combine number 2 and number 3 metrics in this call or in this episode because here's the thing. People get these two conflated. And I want to use the time in this episode to explain to you the difference between these two things. So, number 2 is operating profit. And if you've already drawn parallels and correlations to the words cash flow, let me explain. Operating profit is what your business can fundamentally produce. Now, cash flow, don't get it twisted. Cash flow includes the profitability, but it includes multiple other dimensions of how cash enters and exits your business. So think of it this way. Profitability is measuring the number of people coming in and out of one door of your business. The number of people coming in and out of the net of who came into the party and who left the party out of that door. It's measuring the activity in and out of that door. Cash flow is the activity in and out of 3 different doors. So profitability is just one piece of the puzzle. The other doors are what we call now that door with profit is called operating cash flow, which is why I call it operating profit. So operating cash flow, then there's investing cash flow, and there's financing cash flow. So metric number 3 is cash flow, but let me explain. We then, once we determine that you have a healthy gross profit and then a healthy operating profit, meaning you're running a profitable enterprise. Now, if you're not, by the way, we know what to treat. We're treating operating costs. We're treating things below the gross profit line. We're treating those ancillary expenses, maybe elective spending, maybe some overhead. Your overhead's getting too heavy. So we're going to treat that. If that is healthy, we move on to cash flow. And cash flow fundamentally is your money metabolism of your business. It is how fast money is moving in and out. And by fast, I mean that because speed and timing is key. How fast money is moving in and out of your business for various reasons other than profit. So think about this. For what other reasons would money come into your business that wasn't income? Name a few. Let's say you're putting money into your business by contribution, like when you started it, or you just need to fund it. Let's say you have investors that come in and give you money. That's one way money enters the business, but it's not really income. Let's say you get a loan or a line of credit. There's capital in there, but you haven't really, I mean, it's not income. You didn't do anything to earn it, you know? And the same thing goes the other way. Distributions, paying off loans and lines of credit. All of these things like redemptions, these things are going to be cash outflows that are not related to your operations. And your cash flow incorporates all these different activities. Your cash flow is at the end of the day the net impact to your bank account of your business, not just the P&L, not just the operations, but outside of the operations, like what else is going on? How else are you putting money in, taking money out of the bank account? And that's the fundamentals of cash flow. So once we look at the profitability of the business and we determine that at its core, it is profitable as a business, it is profitable. Now we're looking at cash flow. And if cash flow is healthy, meaning that you have a positive cash flow during the increments of time that you want to look at, that at the end of the day, you're building up a cash reserve, you're not depleting it, that you are actually, increasing your bank account balance every single month. Now that's great. Now, this is where I'm not going to lie to you. This is where most people need to take a timeout, pause, and give us a call and do a power session because a lot of people are confused by the concepts of profit and cash flow. And they have a profitable business, but they don't understand why their cash flow is so crappy. And I'll tell you, it's due to timing because at the end of the day, all the numbers can point to, well, we make money, but like, look at it this way. If all your bills come due before your customer payments come in, you may not have enough cash on the bank account to support those expenses. And that's going to really put a damper on your business's ability to take on additional, responsibilities, to take on opportunities because you may not be able to pay the bills because you may not have enough in the bank account on a given day or a given week. So this is something that a lot of people struggle with and quite frankly, this is one of the most noticeable problems. This is when, you know, I hate to use this analogy, but it came into my head. I don't want to be gross, but like a pimple coming to the surface. Like the pimple or these things form under the skin over time, but it comes to a head when you can finally see it, when it finally actually protrudes and it starts to disrupt. And it's like, ooh, what is that thing? That is what I'm talking about. Cash flow tends to present the problems that are already below the surface that have been there from metric 1 and metric 2. We're on metric 3 cash flow and now we're actually starting to see it. It usually manifests in the form of cash flow problems. But in reality, it can be profitability problems. Cash flow problems can be solved in a variety of ways. It's one of my most favorite things to discuss in a power session because we can diagnose and treat the cause of those things, fairly simply. People overlook cash flow and they focus on profitability. And sometimes that's not the right answer. Sometimes you can be extremely profitable, but you're taking out too much money out of the business and you're not, you're consuming more than you are producing. And that can be detrimental to the cash balance. The other thing to keep in mind is when you're looking at cash flow, like I said, timing is everything. And you could also have pretty solid cash flow over a long period of time. But when you really shrink the period of time down, you look at it and go, ooh, yeah, but if we just have to change the timing of a few of these different things. We shouldn't be paying off our credit card too soon. We shouldn't be, you know, we should be chasing down these payments from customers, or we should be offering some type of incentive for early payment, whatever that looks like for you, to improve cash flow. So, cash flow is number 3. That is the next thing I would say for you to focus on beyond your gross profit and your operating profit. I would then go into cash flow. Like I said, this is when most people call us because they realize that along the way in these first three stops on the bus, something is amiss. And I'm telling you that if that's true for you, then welcome to the club. Most people are stuck at one of these obstacles on the course. Most people. And I would say 90% of business owners are in one of these camps. So you're not alone. Now, in the next few episodes, I'm going to cover a couple of other metrics that I think are really important. And I'm actually going to go through with you the rest of the 7, but uncover why I put them in a particular order. So stay tuned. Finding the right support that you need for your business can be so confusing when it comes to accounting and tax. Sometimes it seems like you can't find a CPA or a tax pro who actually understands your business, or they charge way too much for what you actually need. I've seen this for so many entrepreneurs. They're in a bad relationship with their accountant because they don't know what to look for. It is not your fault. So I created a perfect guide for you that is totally free. It's called the Money Pro Matchmaker, and it will teach you what your pro should be doing, questions you can use to interview them to find the right person for you, and a guide to evaluate them so you know you're getting what you pay for. Do not get stuck or screwed with the wrong accountant. Download the guide now at moneypromatchmaker.com. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.